Today is Tuesday, January 2nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS's Senior Financial Economist. Alan, let's start this morning taking a look at the industrial commodities. What is the outlook for these markets in 2018?
Well, the outlook is very encouraging. We have the copper market at multi-year highs. Crude oil is at multi-year highs as well. Even the lumber market, which is quite the bellwether, so to speak, sometimes rivaling copper as an indicator of the outlook for the economy, also at multi-year highs. So I would expect the industrial commodities to continue to advance probably all of this current year, 2018.
Alan, inflation. Will there be more global inflation in 2018 than there was in 2017?
Absolutely, and especially with the new tax law now here in the U.S., that should spur wage inflation. Of course, we do have the commodity inflation as well, so inflation is likely to accelerate this year, and I think that is something that will support the inflation hedges, especially the gold market.
Finally, Alan, you were bullish the stock market for all of 2017, citing interest rates as the continued driving force. After a stellar 2017 for stock index futures, what is the outlook as we begin 2018?
Nothing has changed. All of the fundamentals that were in place in 2017 that took the indices to record highs are with us currently. So I would expect more of the same, continued strength across the board in all of the stock index futures. Any breaks that we see along the way should be used as buying opportunities.
Steve, as we begin 2018, would you provide our viewers with a summary of the key factors for 2018 grain prices?
Well, I think hopefully the grain traders hope that grains can catch some of the momentum of the industrial markets and, as Alan was saying, the crude market and the stock market, because we've traded pretty much all of the 17 bearish supply news. So now we'll get a fresh start. We've got record demand, but we'll see what kind of weather we have in 2018. Good weather and prices probably won't do very much, but if we have bad weather, we're probably near some lows.
Price ranges. In your opinion, what does the current 2018 price range outlook look like?
Right now, the soybean futures have a small carry. They're around the 9.80 price range. I doubt if we trade over $10 unless there's a weather problem. And a lot of people think that we could drop down closer to $9 if we don't. Corn has been trading sideways at $3.50. It has a carry in it. $3.50 is estimated by a lot of analysts to be the average futures price for 2018 unless there's a weather problem. Wheat's kind of an interesting market in that today we're trading weather, this cold weather in the United States. And so the wheat market probably is the one that could trade over $5 or trade over resistance first.
Steve, from a risk management and marketing perspective, what should farmers and conversely end users be looking to do this winter?
From an end user standpoint, I think you have to sit back and figure out what's my demand, because there is question marks about food demand in the United States, the millennials and people that are health conscious. What are they going to do? Are they going to eat as much food as they have in the past? But if your demand is good, even though the market's didn't carry, you should probably get 6 months worth of ownership on hand right now, especially for wheat and soybean oil, the markets in which we could see a drop in the supply. As far as beans, meal, and corn, maybe you kind of wait a little bit to see if we lose this carry in the marketplace or what happens in South America as far as weather is concerned. As far as the farmer is concerned, he just really is frozen right now because prices are below break even, and if he buys a call, it doesn't look like they're going to trade much higher over the strike price that he's going to pay for. So he needs to hold on to his cash unless he needs to pay a bill, and then on rallies, especially on the basis, sell some cash and replace it with the calls, because volatility is pretty low right now.
I hear talk from some analysts regarding grains when they're talking to farmers about risk management, about having a plan, knowing your costs. Is this the time of year that they really should be looking at those type things?
Well, I think they are, and their bankers is taking a close look, especially on farmers that have a tight cash flow. They might have machinery bills, they might be renting at a high rental cost. And if you look ahead at 2018 and plug in where we think prices are going to be and expenses not coming down, they're looking at another year of growing a crop that will sell under break even. So the plan is, seasonally, we tend to make bottoms in February, and we tend to rally prices into the May-June time frame. So you need to look at that time frame and talk to a broker about the possibility of hitting some base hits during that time frame to add to the bottom line. And then if you get to that June time frame and prices are above where they are right now, start selling some cash. And once you sold the cash, replace it with a call in case we have a dry weather year. This is going to be a La Nina year, and in La Nina years, there's a tendency, especially if we're still dry in February over the southern third of the United States, southern half of the United States is going to be dry, while the northern half of the United States is going to be wet. So that gives us some opportunities to trade from the long side early in 2018.
Thank you. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.